Are we headed for a recession? I keep hearing people use that word today. Well, it's hard to say for sure, but the fact is some of the largest banks are predicting one could come in 2023, and the Treasury Secretary said some things today while she was testifying in front of a House committee that you should probably know about. Plus, at the end, I'm going to tell you what this could mean for you. But first, what is a recession? In this country, recessions are a natural but painful part of our economic cycle. There's no official definition, but generally a recession is the contraction of the economy that may include shrinking of gross domestic product, you probably know that as GDP, shrinking consumption, basically people pulling back on their spending habits, higher unemployment, and lower personal income. So why is this coming up today? Well, I've been reporting since last year. We've been dealing with sky-high inflation. And to deal with that, just recently, the Federal Reserve increased interest rates by just 0.25%. And they plan to increase it several more times this year. But the Fed has to be really careful when doing that because too small of an interest rate hike will cause more inflation, and too big could tank the economy. The Fed has been really conservative about the rate increases so far, but this week, Deutsche Bank and Goldman Sachs economists have expressed doubt that the Fed can keep up that delicate balance on raising interest rates anymore and will likely have to instead slam the brakes on our economy to get this inflation under control. And that could cause a mild recession late next year, which would also trigger higher unemployment. This is what Secretary Yellen said today in front of the House panel about how the Russian aggression in Ukraine could impact our economy.
Represent an unacceptable affront to the rules-based global order and will have enormous economic repercussions in Ukraine and beyond.
Now, this is significant because just a month ago, Secretary Yellen said she did not see a recession coming, but today her use of the words economic repercussions and Ukraine and beyond have a lot of people worrying. But it's also important to note Deutsche Bank is also saying there is considerable uncertainty in its own recession forecast. Now, we've seen recessions in every decade in our country. All of these recessions saw excessively high unemployment, a significant decrease in GDP, and less personal income. So what could this mean for you if it happens? The fact is, recessions have lots of causes, and it's extremely difficult, as I said, to predict them. They can last a few months or more than a year. The Federal Reserve will meet again in May, so watch to see how much they increase interest rates at that point. So remember when I told you yesterday in this video the president was going to extend the federal student loan forbearance program until August 31st? Well, he did that today as we expected. But what was not expected was the other part of this announcement. Turns out there's one small little line in the Department of Education press release that has big implications. It says the administration will allow all borrowers with paused loans to receive a fresh start on repayment by eliminating the impact of delinquency and default and allowing them to re-enter repayment in good standing. Now, that may not be a big deal to some of you, but it will be to the 7 million federal student loan borrowers whose accounts are currently in default. That means before the pandemic, you had your wages garnished or Social Security benefits withheld. Well, now because of this announcement, when the forbearance program eventually ends, your accounts will be restored to good standing and collections will not resume. Now, that doesn't mean you'll never go back to collections. If you fail to pay on your student loans, you absolutely will. But at least when the forbearance program ends, you'll be in a better place to start repaying that loan.